So we've got Netflix. So under Netflix, in the macro scheme of things, we have a broadening range, excuse me, a contracting range wedge or a rising wedge, which is bearish. That's in the macro. In the short term, what type of pattern do you see that we potentially spot here on the chart? Anyone want to take a guess at what potential pattern we see there? That's right. Yeah, potential head and shoulders. Now it's not perfect because it's a little bit scrappy. When I say scrappy, what I mean by that is you can see that the this left shoulder is symmetrical, and the head comes up, but then doesn't come all the way back down to the neckline. We could argue that the neckline is therefore not all the way to the bottom and is at 440, but of course then that creates a problem here with this this lower low here that comes down to 420. So it's not a perfect head and shoulders because of the lack of symmetry between the left shoulder and the right shoulder, and that it hadn't came all the way down to 420 before going back up. So I wouldn't be relying solely upon that that pattern. But if we have a look at some of the specs on the company, we see again the high P/E ratio. We see the insider transactions are negative 21%. We have a 10% short float. And the other interesting factor is also I like to consider the target price. So the perfect time that we're looking to purchase the puts on these potential positions is when they are at a smart money or key resistance level, because that's where we're going to get ultimately the best possible risk versus reward. So hopefully that makes sense. So what we're looking for, in other words, is not just that the stock has these weaknesses, but we're also ideally looking to be shorting it or buying those puts on the day or close to the day that they report, to get the minimum amount of premium, the cheapest option. And the other ideal thing that we're looking for is the chance to short the stock or buy the put, in other words, as it's rallying into a resistance zone, which also makes it even cheaper. And this is where you get the really big drops. So think of that as like think of that as in terms of having like a tight stop loss. The closer to the resistance the stock is when you purchase it, the better possible return is going to be. Okay, so an example, as you can see here on EGP, the perfect time on this would be looking at, where's it reported? It reports on the 16th after market, which means we have all day tomorrow and all day Thursday for the stock to move. The ideal price that what we'd be looking for is we'd be waiting for the stock to rally up into this zone up here. And you can see it almost got there today, but up around that $64.20, $64.30. And that is then when we would be looking at an out-of-the-money put. So let's go over and have a look at the option chain to show you an example of what we're looking for. So we'll just go over to Yahoo Finance, a very easy place to get a quick option pricing. So we'll go into quote lookup, EGP. You can go into options. And you can see, unfortunately, this one doesn't have really any kind of option chain at all, other than December 14 and March 2015. So this would not be a candidate. Let's have a look at Netflix. That was the one above. Okay, so you can see that they report tomorrow. We go into options. Okay, we'll have a look at. We'll bring up the chart as well. Have a quick look at the pricing where we're at. Okay, so you can see here the current, where the current breakdown was here. We had yesterday broke this moving average, which is the 100-day moving average. You can see that was broken. You can see we have a cluster of support down here at 420. You can see we've got horizontal support that comes across as well at 420. We can have a look at some of the technical signs of weakness here. We've got yesterday's down volume was 2.89 million. We can see that today's up volume was 2.39, so less volume up than it was down yesterday. It's held beneath the moving averages. We look for possible trend line support. It's possible that there is support there that it caught yesterday. As you can see, as illustrated from these previous two lows, extended off to the right. And so by doing this type of analysis, this allows us to look at where kind of this potential gap down area would be to dictate what type of options we might be interested in purchasing. So considering the stock is at 449, the type of options we may be interested in then is either 440 or 430 puts. And we have a look at the pricing there. Let's scroll down. So as an example, the 430 puts, $10.45. $10.45. So the price of the stock is currently $4.49. So if we got a $19 drop down to $4.30 or below, then that means an increase essentially of close to $19 on that $10.45 premium. So that would equate to a close to, well, 190% gain on the option price. So that's the kind of attraction of the put. Now those are fairly expensive puts. Just going to make sure that that's not. Yes, okay, here we go. So those were the actual the weekly expirations for next week. Here you can see the ones actually expiring this week, only $7.90, and that small move in price today up equated to a $5.35 drop in the premium. So if you get a $19 rally on $8, now you're looking at a much bigger percentage move. Looking at over a 200% move if the stock were to gap down towards 430. And what you can see here is you can see a very high level of open interest also in the option chain, 2,352 contracts at that price. And if you have a look, yes, I thought that was volume. That's an incredibly good amount of volume. 1,038 put contracts were purchased today, which is half of all of the contracts that exist there. And then you can see that other number, 1,067 contracts of 3,000 purchased at 440, sorry. So in terms of the